Hey everybody, Preston Brent here with our trader user group, a weekly roundup. This is for the trading week ending March 2nd, 2018. Well, as we kick off March, just keep in mind March has a tendency to be one of the better performing months for the S&P 500. February is one of the poorer performing months for the S&P, and that's not to suggest that's what's going to happen this time, but I just wanted to throw that out there. Now, what you see on the screen here is a daily chart of the SPX, the cash index. And you can see here that, we had this big pullback that gave us the lows back on February the 9th. And we had the high here at 2872. Again, this is the cash index. And then we came down for the low. And you could see where we closed today, just barely above the 2018 open price of 2683.73. Now, my fear all along in this, typically when you have a big pullback like this, you have a few moves that statistically tend to happen. You have a down move, you have an up move, and then you have another down move. Now, the down move is what everybody always watches, right? And the question on the down move, so you've got the first move, then you got the typical rally, right? Then you have the subsequent move like this. So it's typically a 1, 2, 3 pattern that you get more than 60% of the time. Very rarely will you have a pattern where it moves up, it moves down, and then it moves back up again like that, where it gives you this V bottom. If you have a 10% correction, if you come and go down and go like that, and you have less than 5%, that is a little bit more believable for a V bottom. But once you get into official correction territory, no. Because what happens when you get into a correction territory, there is a sentiment shift in big money and how they've allocated their portfolio and how they've taken risk or how they've changed their risk parameters. And what big money will not do is, if you pull back 10%, more than likely the odds, is they're not going to just go full bore back in again and drive it back up. Most of them are hedging on the way down with shorts, and they're increasing their hedges as the price goes lower. When it starts moving back up, they may cut some of their hedges, but that's not new long positions. It's just known as a short squeeze. Retail traders like you and I, well, we may just, put on some shorts, and then when it starts moving against us, we'll shut them down. But that short squeeze generally does not run back up to the prior all-time highs, especially with a 10% down move, roughly. Okay. And then we've established a key pivot point. So right now, we've got a couple of key pivot points that I want you to pay attention to. Okay. Pivot point 1, obviously, is the all-time high. Again, this is the cash index. You can do this on the EMini S&P 500 futures too, but I'm just doing it on the SPX right now. You can see that key pivot point, 2532.69. Okay. Now, one thing I always do on my charts, I highly recommend you do this too, is that you put in the high and the low for the year and the open price for the year. Prices, sometimes when they get around these prices, psychologically will just be drawn to them like a summer bug to a bug zapper. Prices like staying around that area there. And you can see how over the past 2 days, we closed there and we closed here. So we kind of split the 2018 price. Now, what I was telling our members in our chat room today is that if we can go into close and close above the open price, that'll set the tone, a positive tone for Monday. But we've got these key pivots, all right? So let me just label them again for you. Key pivot 1, key pivot 2, key pivot 3. Okay, this pivot right here, well, let's just call it pivot 3. That was pivot 1, pivot 2 for the lows. And then this pivot 3 here was just a counter trend rally. Okay, just like that. Now, this is where we are right now. The question is where to next. Okay. We've got an upsloping trend line right there just sitting just underneath this. And then you can see I've got some Fibonacci nodes, Fib nodes just below it. And then we got the 2018 price. My fear is right up in this level here, there's going to be a lot of selling. And it's going to drive the price back down. We'll have a dual test here. This is exactly what happened in 2016 in February. Gave us a MACD pattern like this. And we made a double test down here. And then when it started moving higher, we had a beautiful, what we call a bud, bullish divergence. And that was our signal to go long. Okay, now I've shown you this before. I haven't shown you on the cash index, but let me show you again. If we come back to February, right here, here's the chart. Now, on the cash index, you can see here that here we were set up very well. In other words, we knew well in advance, probably into the middle of November, that we were going to get some really craziness either in January or February. And that's what happened, because we were making lower highs. Remember, at this point in time, it was near all-time highs, right? And we'd make a low, come back up, we'd make a lower high, make a lower low, come up and make a lower high. Folks, that's a prescription for a downtrend, lower highs, lower lows. But we had 60 days to prep for it. We had 60 days to just start repositioning our portfolios, and then it gave it all up. And then we had that run, that big counter trend move right there. Okay, now it was a big move. Doesn't look like it's as much as the one that we've had recently, but it is on a percentage basis. Because remember, down here, the prices were around the 1800 level, not up around 2700, 2800. All right. So percentage-wise, the distance is about the same. We got up here. Okay, so here was the move, right? We had a key pivot point right there. We had a key pivot point right there. We had a key pivot point right there. All right, so there's 1, 2, and then 3. And then we chopped around for a few days and we gave it all up. Came back down, actually made a lower low. Had a beautiful bud. And my signal to our members right in this area here was to go long. We had a resistance point right there, and I said once we get up here, you can see that move all the way down during the day. Right at that point there, we got out, and then it closed at the highs for the day, even though it flushed a lot of people out right there. And I said, if we clear this level here, let's go long. We cleared it, we got long again, and we stayed long, and we did very, very, very well. So this was a 1, 2, 3, and then we came down to a 4 move lower, giving us that setup there. Now, is that what's going to happen this time? Hard to tell. Every time the markets are a little bit different, but you've got to honor it, right? So that would mean that we got that pivot, and this pivot, right? Same as before. 1, 2, 3, 4, right? There's 1, 2, 3, and then 4. MACD would probably come down like that. The sentiment and the momentum would carry us lower, and then we would bounce. And then we get the cross. Then the bounce higher, my stop off point would be right up in that area right there. I would expect a run back up there. We may stop briefly at the 2018 open price. That is assuming we get that play out. Now that's one alternative. Another alternative is because we closed above the 2018 open price on Friday, and it was a huge reversal during the day. Let me just blow it up so you guys can see the candle. Right? I mean, we were still, you can see this was the move. When Jerome Powell came out and did his testimony, we were at 27.89, and then boom, we came all the way down to 26.50 in the SPX, right? So if you did the 27.89 minus the 26.50, It's 139 points. And you take the percentage of that, and that's almost, just in those 4 days, almost 5%, about 4.98%, just in a few days. That's how fast it moved, based on his comments going from possibly 3 rate hikes to 4, although he never used the words 4 rate hikes. You had to read between the lines. And that's the way the markets interpreted it. And actually, the markets were starting to kind of calm down, and then the Trump administration came out with the steel tariffs, and we sold off even more, probably flushing people out. Okay. But you can see here that we opened right here. We went a little bit lower, but then we closed near the top. Okay. The momentum is clearly to the downside, but we're able to clear the 2018 open price. So what I'm going to be looking at is just a continuation of this momentum somewhere in this area right here. You know, clear the 2700, maybe up to 2720, 2730, and then start to run into problems and probably come back down and test this area again. We're going to watch this very closely. But either way, that's a key pivot high. If we take it out, we're going to come up to 2800 very easy. Okay. But I wanted to show you guys just how price action typically moves when you get this on. Now, if I go to the futures, let me just put all of my indicators back on the screen here. And let's go to the futures, E-minis. And I've got everything on the screen here, right? And you can see here where I do have volume. Now I got volume over price. You can see right there. And then there's a little bit right there. And then there's some right there. This represents buying versus selling, right? And there is a ton of buyers and sellers sitting down here. And before the buyers have won out, they've held the price up. And that's why I've got a very wide zone here, a support zone for the E-mini futures. Right in this area here, running from about 26.75 all the way down to about 26.45, about 30 points, very wide point, okay? But the pattern is still the same, 1, 2, and now we're in the process of how low do we go, right? Now this includes overnight trades, and you can see here, unlike the SPX, we've got a double test right here on a daily, but there was no effect on the MACD. We actually ran up, came right back down real quick, and now we tried to come up. So that lessens some of the downward stroke that we could expect. Okay, it takes some of that pressure off. It's like a relief valve. And we closed up above the 2018 open price. If I were to zoom it in, you can see right there, 2018 open price. And that's where we closed, okay? And on the daily chart, the 50 EMA is sitting right there at 27.13. So I could see us running right up into this area right here on the futures and having the momentum take us up a little bit. But I think we're still susceptible to a down move. Today we were looking at a very tight time frame of the 5-minute chart. And when I pull that up on the screen, you'll see we were trading that almost all day today. And you can see on this 5-minute chart here, let me scrunch it down a little bit more. From the morning on, right, from around 10 a.m. when we did this double bottom, gave us a bullish divergence on a 5-minute chart, we were riding this thing up. And we were making higher highs, higher lows. That was my target that I put up around 1 o'clock this afternoon. All right, maybe around 1:30 or 2. That was my target going into close right there, 26.89. And we finished at 26.90, 50. I missed it by 50 cents. But that was our target, and we came right up to it. So rather than having the tendency, as we've had almost all week, to just sell off on any down move, I said, let's wait. You know, and if we breach this upsloping trend line, okay, then we can shift sentiment. But we never really did. We had a little bit of a scare there, but it reversed fairly quickly on this 5-minute chart, literally in about 5 minutes. And once we cleared the 26.75.25 open price, I said if we can get up above it, and then we took out that key pivot right there, right around 3:30 in the afternoon, and I said that'll hold, and we came right up to my target. All right, so it turned out to be a nice day for just kind of how we're tracking price action right now. Okay, so that and you can see here that volume over price on this time frame, there was a lot of buying right there, and then there's a volume right there. That's just kind of where we're sitting right now. Okay, so this momentum should hold up going into Monday, but then it could shift back to the downside again. That's what we have to be careful of. The only indicator that was pretty much strong all day long was the Russell futures. I mean, if we come down and look at a 15-minute chart of that, let me get it on the screen here. Look at the Russell futures. It didn't hesitate. Starting at 9:30 in the morning when the market's open, right here, it was off to the races. It didn't look back, and it just went strong. We had a little bit of a momentary consolidation there, but then it just took off. Why? Because it's small cap and mid cap. This index is less affected by any tariffs because it gets, a larger percentage of its revenue from U.S.-based companies rather than offshore. So it tended to react more favorably to any potential rate hike or tariff hike, rather, import tax or duty. So the Russell has been good. If we look at it on a daily basis, it has not been as good, right? Notice the Russell is still red for the year. There's the open price. That's where it closed. And we still have the same pattern. We have that huge downstroke, this huge upstroke, and then right here, right? So that's a key pivot, that's a key pivot, and that's a key pivot. So these are the areas that we're going to be focusing on going into next week. One of these pivots is going to break, guys. If this guy breaks, then the odds favors coming up and challenging that pivot. If this line right here breaks the lows that we made for today in the Russell, then the odds favor that we're going to come down and test the 1400 area again. Very simple. Okay. So don't try and make this too complicated. And if you don't, then you'll find that your performance improves dramatically. If we look at Nasdaq also, hit green before everybody else did as well. You'll see Nasdaq a little bit stronger. We still had the downstroke, right there. So that gave us a key pivot there, a key pivot there, and we got a key pivot there. It did not make new highs. And then we got this downstroke right here. We're sitting above the 50 EMA. So the Nasdaq's the strongest. If it can hold this and start moving higher, it'll pull everything else too. This just says big money is still coming in and buying some of the better stocks. It's not a mass washout, okay, where everybody is just selling everything, good and bad. So the ending on Friday was, a victory for the bulls. If we look at volatility, it gave it all up at the end of the day. Let me find it here. Vol was down about almost 3 points. You can see the big move in Vol. We actually went up into zone 3, right? Vol opened right here. It went all the way up right here, well over 26, and then it closed at the lows, okay? I've said all along that Vol is probably going to stay in zone 2 a little bit longer than normal. That goes from about 15 to 22. Which gets us back more to a longer-term average of where vol should be. Because 2017, almost the entire year, vol was down here in the toilet. A lot lower than it should have been. So this is kind of what I'm seeing here in volatility. If you look at the term structure of volatility, you look at the futures that go out about 6 months, vol only moved up about 4 or 5% compared to about 15 to 20% near term. So that just tells me that this is just something that I think vol is going to bleed off once the markets get it all sorted out. Okay. Now, that goes without saying that Power Ranger Powell, our Fed chair, our new one, or the Trump administration, I'll call him Red Bull, they don't say anything that just totally cascades the market lower and vol higher. I mean, that can happen. We've seen it already several times this week, in 1 week. If we look at bonds, you can see bonds was down pretty hard. I'm still in the short mode for bonds. Okay. My target for bonds has not changed. It is still around the 140, 142 area. I'm sorry, 140.27. It's still in this area right here. If we look at the interest rates, the 10-year, which is where everybody is focused on right now, I've said it would get up into this area right here and then just run into a brick wall and stay for a while. I don't think it's in the Fed's best interest to let it run up much higher. They'll jury rig this somehow. But that's kind of what I see. All right. The yen, I like long yen, short euro. I like long yen, short dollar. You can see here, the yen is the second largest factor in the movement of the US dollar index. The euro is the biggest. The yen is moving up because we got a surprise announcement by Bank of Japan, the head of Bank of Japan, who said that we may look at tapering in 2019. So the yen just took off. It is also a place of safety in global turmoil. So the yen is very strong. And then the dollar is just resuming, or has resumed, the dollar index has resumed its move lower right here. All right. This is a typical pattern. I said what would happen with the dollar is any move higher is probably more than likely going to be sold off. And we'll probably have the dollar come back down again. And then, of course, if we look at gold, with a cheaper dollar, that tends to boost gold. Gold is just still in, it just took back its 50 EMA. It fell. I am still not playing gold to the upside. I'm not a believer in gold at this time. I think eventually gold will catch on, but I don't see it right now. If we see inflation starting to come in, I think you'll see gold start to pick up a little bit more, but I just don't think there's as much inflation out there as people think is going to hit, which is why I think interest rates are going to stay stuck below 3% for a bit. And then, of course, if we look at energy, if we look at oil, on a daily chart of oil, this looks almost exactly like the S&P 500. And right now, we're kind of getting the flow the same way. We got a pivot high, pivot low, and then another pivot right there, right? You got that downstroke, upstroke, and then right here. There's the 2017 open price. This is where we closed. Looks just like the S&P 500. Where do I think it's going to finish up? I think oil is probably better calibrated somewhere in this range right here, right? Somewhere around $57 to $58 a barrel, plus or minus $5 a barrel for 2018. That's where I think we'll end up. Now, we may move up, we may move down. We got some things on the table that could happen that could influence oil. If we put more tariffs on Venezuela, they got elections on April 21st and 22nd. If we put more tariffs on them, we stop buying their oil. That'll move oil up because that'll take oil off the market from Venezuela. It'll crash that economy. They're doing about 1.1, 1.2 million barrels a day. We'd probably affect it by 400,000 or 500,000 barrels a day. That would take more supply off the market, and the tendency would be move oil higher. The oil tariffs, or the steel tariffs, will have a tendency to raise the price of production equipment for the shale frackers, which means it'll cost them more money, which means they may slow down production. Again, a risk upside, not downside. So we got a couple of upside risks. And then, of course, we got the potential war on the Korean Peninsula. If that happens, that's at least a $10 a barrel upside risk, which I think the odds of that happening are fairly low at this time, but that's that. So we got three upside risks for oil. The only downside risk is everything just keeps going the way it is, and the frackers keep fracking, and then just supply. But that'll take us back down here. I think the downside risk are limited. The upside risk are bigger. Okay, but that's kind of where I see us with oil right now. All right, folks, that's pretty much where we're sitting right now. If you're not in our group, I highly encourage you to come in and join us. We're having a fun time in the markets.